Let's now discuss the concept accounting for depreciation. See, depreciation is nothing but loss in value of property, plant, equipment. Currently, we will call the assets as property, plant, equipment only by default. Rather than calling that as a fixed assets, it's better to call that as property, plant, equipment, because as per AS number 10, we confine our assets into only these types: property, plant, and equipment only. Property deals with building like, and plant you are aware about, right? So plant and machinery. The difference between plant and machinery is nothing but anything movable form of item will be called as machinery. If it is not being movable, then it is called plant. And equipment also being part of that. Even sometimes plants, tree, whatever it may be, tree, plants will also be considered as asset in some cases, property, plant, and equipment. So all these things are dealt under AS number 10. Accounting standard. It's a standardization. So, if you are purchasing an asset for rupees say 1 lakh, this 1 lakh will not be considered as an expenses in the very first year itself. Assume that this asset will work for around 5 years, or decently we can use it proper purpose, or for the operational purpose, or for production purpose, or for rental purpose, whatever it may be, for 5 years. After the 5th year, it becomes useless. So then the 1 lakh what you have paid gives you benefit for more than 1 year. That too, the benefit spreads over up to 5 years. After the 5 year, it becomes zero only. It's worthless. Then by the time it's an expenses, right? If you consider the entire loss being the entire value of this 1 lakh being the loss in the 5th year, it's a big loss. We should not do that. We should not do that. Rather than debiting that entire 1 lakh rupees as a loss at the time of selling or discarding the assets, we can spread out that expenses or loss over the life. So each and every year we debit 20,000 rupees, nothing but 1 lakh divided by 5 years. 20,000 rupees can be debited to the P&L account or income statement, because to the extent of assets we enjoyed, its benefit will be debited to the P&L account. So this 20,000 can be debited to the P&L account in the very first year, and balance value remains as your asset, unconsumed value. See, this logic will be applicable for all. When you purchase 1 lakh rupees worth stock, material for sale purpose, after selling around 80,000 rupees worth stock, remaining 20,000 units are worth units or stocks remains unsold. What you can do? The unsold units of rupees 20,000 can be considered as an asset transferred to the balance sheet. The same logic will be applicable here also. 1 lakh goods purchased, 80,000 of goods sold for some profit, remaining 20,000 worth of goods is not sold as such now, can be transferable to the balance sheet as an asset. 1 lakh rupees worth asset purchased, you enjoyed 20,000 rupees worth of the asset will be named as an expenses, debit to the P&L account. Balance, what is that? Unused assets will have the benefit in the future, can be transferable to the balance sheet asset side. Can be transferable to the balance sheet into the asset side. But when it comes for the in general non-current assets, will have the benefit for more than one accounting year. More than accounting year. But when it comes for the current account, within the next year, as on 31st March, from the date, within 1 year, we can enjoy the benefits. That's all. We cannot enjoy the benefits beyond that, then it's called current asset. As on 31st March, from there, we can still enjoy the benefit for more than 1 year, then it's called as non-current asset. So you can understand the two classifications, current assets and non-current assets. Whatever the payment you do, for that payment, you enjoy the benefit within that financial year for which you are accounting expenses. You still have the benefits to be enjoyable in the next financial year, then it is an asset. And subsequently, compare whether the benefit extends only 12 months or more than the 12 months. If it is for only 12 months after the 31st March, then it's called current assets. No, it will give benefits for more than 12 months, then it's called non-current assets. In this scenario, when it comes to the long-term assets or non-current assets, to the extent of benefits enjoyed every year will be debited to the P&L account. This is the P&L account item. and this is the balance sheet. This is the thing we are debiting in the P&L account very first year. This is the amount going to be considered as an asset to be shown in the balance sheet. In the second year, another 20,000 rupees could have been considered as an expenses. Balance will be your asset. In the third year, another 20,000 rupees is debited in the P&L account, and thereafter the balance sheet has the value of the assets being only 40. And fourth year, the value lost because of the consumption or usage of the asset is 20 debited to the P&L account, and now the balance sheet has the value of the assets being 20. Fifth, and 20,000 rupees is also being considered as a loss and expenses debited in the last year. Thereafter, we don't have the assets. So, such a way, whatever the payment you made gives me benefit for more than one accounting period, means that entire payment will be spread over to that years. Right. Loss in value. Each and every year, this value is reducing. Right. 80, 60, 40, and 20. This is called loss in value. And also we have segregated this value and debited to the P&L account year on year up to 5 years. Am I right? That is called depreciation. Is the allocation of depreciable amount of property, plant, and equipment over its estimated useful life. Now you have to understand the term depreciable asset. Depreciable asset is nothing but the original value at which you purchased minus scrap value. It may be realizable at the time of end of its life. Whatever the asset you purchase may have a useful life of say 4 years or 5 years. After that 4 or 5 years, what happens? It becomes useless. As it becomes useless, or though it may be useful, but it may be costlier to use it. Then why do I want to use? We will just discard that. If I plan to sell in the market, it may realize some money. Around 10,000 or 20,000 rupees. That is called residual value or scrap value. In this case, assume that 100,000 rupees is the value of the asset. We assume that by the end of 5th year, it will fetch you 20,000 rupees. It means the difference between these two is 80, is nothing but the loss in 4 years. This is the loss in 4 years. This loss will be spread over for the life of the asset. If the life of the asset be 5 means, each and every year you are going to debit 16,000 to the P&L account. In the very first illustration here, I assume there is no any scrap value or scrap value being 0. If I assume the scrap value being 20, from the 120 is subtracted, 80,000 is nothing but what? 80,000 is depreciable amount. This is called depreciable amount. That depreciable amount is going to be adjustable over the lifespan. And you understand that depreciable amount is nothing but cost minus scrap value. And one more point I have to discuss here is, it's a non-cash expenses. The nature of the depreciation is non-cash expenses. See, if you are making any payment for the expenses, what is the journal entry you will usually pass? Expenses account debit to cash. If you are paying rent, say 15,000 rupees, then rent account debit to cash is the entry. Is that okay? Rather than paying the rent, you have purchased the land and building for rupees 10 lakhs. As you have purchased the land and building for 10 lakhs, we assume the amount to be a loss for every year, being 10% of that is equal to 1 lakh. Right? That 1 lakh is considered as depreciation. That 1 lakh is considered as depreciation. Is that okay? The value of land and building, because the land and building will give me benefit for more than one accounting year, and as it has life for more than one accounting year, for each and every year of usage, the value of the asset will go down. Now I have to estimate what is the value it's going to be losing every years of use. I assume roughly around 10% of this 1 lakh means this 10 lakhs may be lost because of the usage. As per this calculation, out of 10 lakhs, 10% to 1 lakh is going to be loss in this value of the assets, or value reductions of the asset. And this value is named as depreciation. Now, come on, tell me what is the journal entry for the depreciation. Depreciation is the expenses. What is the journal entry for the depreciation? Come on. Yeah. Depreciation account debit to not cash. That particular asset is going to be charged. Here, the asset is land and building, the value being 1 lakh. Is that okay? See, whenever you make a payment for rent, wages, advertisement, parallelly it will have the impact in the balance sheet's cash and bank balance. That cash and bank balance will go down, right? So the cash and bank balance will go down. But when it comes for the depreciation, which is nothing but loss of value of the assets, cash has not gone out at the time of debiting the depreciation, the P&L account. But it will be a reason for the reduction of the assets value in the balance sheet. Rather than subtracting the payment for rent and EB from the cash account, I'm going to subtract the depreciation from the concern asset. So, because of depreciating or deducting from the concern account, there will not be any impact in the cash. Will not have any impact in the cash. That's why it is called as non-cash expenses. Is that okay? Hope so you could understand.